Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top stock picks across 11 market sectors for 2024. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. In the world of investing, a sector refers to a broad category that encompasses businesses with similar characteristics. It's like putting companies into neat boxes based on what they do. This categorization is incredibly useful for investors because it helps them organize and understand the market better. While there's no official rulebook for naming and defining sectors, the financial world has embraced a widely used system called the Global Industry Classification Standard. This system, established in 1999 through collaboration between Standard & Poor's Global and Morgan Stanley, has become the gold standard for sector classification. The GICS categorizes companies into 11 primary sectors, which include materials, industrials, financials, energy, consumer discretionary, information technology, communication services, healthcare, consumer staples, utilities, and real estate. Understanding which sector a company belongs to is crucial for investors when building and managing their investment portfolios. This knowledge helps them make informed decisions because different sectors can behave differently based on market and economic conditions. By spreading investments across various sectors, investors can lower the overall risk of their portfolio. In essence, sector diversification is a smart strategy for reducing investment risk. Despite the benefits, navigating through thousands of stocks segmented across 11 sectors may appear daunting. Here's a breakdown of one standout stock from each of the 11 sectors. First sector, materials. Sherwin-Williams Company is a key player in the materials sector, specializing in the production and distribution of paints, stains, and coatings for both retail and commercial clients. Operating in 120 countries, it stands as a global leader in this industry. With a market capitalization of $78 billion, SCW is classified as a large-cap company. Fiscal 2023 revenues amounted to $23 billion, and it currently offers an annual dividend of $2.42 per share. In a report dated January 27, CFRA equity analyst Emily Nassef-Mitch elevated SCW's rating from hold to buy. Nassef-Mitch noted a notable 5.8% increase in the company's gross margins during the fourth quarter of the previous year, despite relatively stagnant sales. She set a 12-month price target of $334, indicating an 8.6% potential upside from its closing price on January 30. Second sector, industrials. Caterpillar Incorporated, CAT, stands as a prominent heavyweight in the heavy machinery industry. Headquartered in Irving, Texas, CAT boasts a global presence with operations spanning across all regions. The company specializes in the manufacturing and distribution of various equipment, including mining machinery, sizable natural gas and diesel engines, turbines, locomotives, bulldozers, backhoes, dump trucks, industrial marine vessels, and an array of other vehicles and machinery. Notably, CAT extends its services beyond manufacturing, maintaining a robust financial division that offers diverse financing solutions to its extensive network of dealers and end-user customers. Scheduled for release on February 5, 2023, CAT's earnings report is eagerly anticipated by Wall Street analysts. Forecasts project revenue exceeding $67 billion for the year, with optimistic projections for continued earnings growth until 2026. Investors will find solace in CAT's 1.7% dividend yield and its impressive track record of increasing annual dividend payouts for 27 consecutive years. Third sector, financials. Franklin Resources Incorporated, a leader in asset management. It is a prominent player in the financial sector, specializing in asset management. Established in New York City back in 1947, it has since flourished into one of the globe's premier asset managers and custodian banks. As of December, the company's preliminary monthly assets under management, AUM, reached a substantial $1.46 trillion, marking a notable 3.5% increase from the previous month. This growth was primarily fueled by robust inflows of new assets and favorable market trends. In the fiscal year 2023, Ben generated a commendable $7.8 billion in operating revenue, underscoring its financial strength. With a market capitalization of $14 billion, the company maintains a solid position in the market. Its revenue model, characterized by high levels of recurring income, supports its current annualized dividend of $1.24. Notably, BEN has consistently increased its dividend payout over the years, earning it a prestigious spot on the Dividend Aristocrats list, reserved for companies that have consecutively raised dividends for at least 25 years. Investors are also attracted to BEN due to its healthy dividend yield, which currently stands at an impressive 4.5%. Fourth sector, energy. Energy Transfer LP. While not a conventional stock, ET is a master limited partnership, MLP, structured as a partnership rather than a corporation. Its shares, termed units, are actively traded on exchanges similar to stocks and ETFs. ET is a substantial player in the midstream oil and gas industry, with a market value of $48 billion. Primarily, it operates in the transportation and storage segments of the energy sector. The company boasts an extensive network of pipelines spanning across the continental U.S. and owns strategic energy storage facilities near major ports in the country. One notable aspect of ET is its rare status as an MLP holding an investment-grade credit rating from S&P. This distinction holds significance for investors, particularly those seeking income-oriented investments. In a recent press release dated January 25th, ET announced a 3.3% increase in its dividend, bringing it to an annualized rate of $1.26 per share. With current price levels, this translates to an impressive yield of 8.7%. Fifth sector, consumer discretionary. Lowe's Corporation stands at the forefront of the consumer discretionary sector, specializing in home improvement retail. From its humble beginnings as a solitary hardware store in North Wilkesboro, North Carolina in 1921, Lowe has evolved into a dominant force with over 1,700 expansive warehouse-style outlets and a staggering market capitalization of $124 billion. Catering to both retail customers and building contractors across North America, Lowe offers a comprehensive array of building supplies, materials, tools, equipment, and household appliances. Its extensive network of stores, diverse product range, and robust marketing strategies propelled the company to achieve a remarkable $97 billion in revenue in 2023, up from $96 billion the previous year. The home improvement industry is inherently susceptible to fluctuations in interest rates and economic vitality. Should mortgage rates escalate or economic growth stall in the foreseeable future, Lowe may face challenges. Nonetheless, its enduring performance underscores its stature as a premier investment opportunity. Sixth sector, information technology. In the realm of information technology, Cisco Systems Incorporated stands as a prominent player. Operating within the communication equipment industry, CSCO specializes in crafting the very infrastructure that powers the internet. The company engages in designing, manufacturing, distributing, and maintaining a diverse range of products tailored for businesses operating within the communication and technology sectors. Its core offerings include networking equipment, internet protocol products, communication and collaboration tools, digital security solutions, and applications. Additionally, CSCO has cemented its position as a frontrunner in the burgeoning field of cloud computing over the past decade. Geographically, CSCO operates across three key segments. These include the Americas, covering North America, Central America, South America, and the Caribbean, EMEA, encompassing Europe, the Middle East, and Africa, and APJC, which includes the Asia-Pacific region, Japan, and China. Given the exponential expansion of the global internet landscape and the sustained drive towards interconnecting consumer goods like smart devices, CSCO's trajectory appears notably promising. Boasting a market capitalization of $205 billion and raking in $57 billion in revenue during fiscal 2023, the company presents a compelling case for investors anticipating sustained growth in the long run. Seventh sector, communication services. Comcast Corporation, headquartered in Philadelphia, extends beyond its initial role as a local cable TV provider. This multifaceted communications entity stands as a $188 billion media and entertainment powerhouse with a global reach. CMCSA delivers broadband, cable, and satellite TV, along with phone services, to residential customers across the United States under the Xfinity banner through its cable communications segment. Additionally, its media arm oversees the NBC Universal suite of television and streaming offerings, while its studios division creates content for the Universal Studios brand. Furthermore, CMCSA operates a theme parks division responsible for managing the renowned Universal Studios parks located in America, Japan, and China. Notably, CMCSA's Sky division manages the Sky Sports Network, a leading entertainment entity in Europe. The company's diverse portfolio facilitated revenue generation, surpassing $121 billion in 2023. Numerous financial analysts, such as Jessica Reif-Ehrlich from Bank of America Securities, express optimism about CMCSA's prospects. Reif-Ehrlich recently reaffirmed her buy recommendation for the company, setting a 12-month price target of $55 per share. This target implies an approximate 18% increase from CMCSA's closing price of $46.65 on January 30. 8th sector, healthcare. Abbott Laboratories is a key player in the healthcare sector, specializing in the development, production, and distribution of vital healthcare solutions. Operating within pharmaceuticals, diagnostics, nutrition, and medical devices, ABT offers a wide range of both branded and generic products. Established 136 years ago and headquartered in Abbott Park, Illinois, ABT's influence extends globally, with its drugs, supplements, and medical equipment reaching markets worldwide. Renowned for its commitment to medical innovation and the extensive diversity of its product portfolio, ABT stands out among its competitors in the sector. In 2023, Abbott Labs recorded a robust revenue of $40 billion, with projections from Wall Street anticipating a rise to nearly $41 billion in 2024, and a further increase to $45 billion in 2025. Investors can also benefit from ABT's dividend payout, currently at an annualized rate of $2.20 per share, translating to a 1.9% dividend yield based on current market prices. 9th sector, consumer staples. Colgate-Palmolive Company holds a significant position in the consumer staples sector, with a market capitalization of $69 billion. Its annual revenue stands at approximately $20 billion, supported by a portfolio of renowned household product brands. While primarily recognized for its soaps, detergents, and oral hygiene products, the company is experiencing notable growth in the segments of home care and pet nutrition. In 2023, the majority of CL's revenue stemmed from North America, although it demonstrated robust performance across other regions, including Latin America, Europe, Asia, and Africa. While not necessarily leading in terms of stock price appreciation, CL boasts a compelling feature in its expanding dividend payout. From a quarterly dividend of 34 cents per share in January 2014, the current dividend rate has surged to 48 cents per share per quarter, marking a remarkable increase of over 41%. 10th sector, utilities. Atmos Energy Corporation operates within the utility sector, specifically focusing on natural gas distribution. ATO, a regulated utility provider, serves residential and commercial clients across several states, including Colorado, Kansas, Kentucky, Louisiana, Mississippi, Tennessee, Texas, and Virginia. Notably, its Atmos Pipeline Texas Division segment significantly contributes to the company's overall revenue and earnings. Despite its $17 billion market capitalization, ATO consistently achieves remarkable revenue figures. In both 2022 and 2023, the company reported $4 billion in revenue. Given its position in the utilities sector, ATO offers investors a stable dividend income, providing a reliable yield. Presently, the dividend rate stands at $3.22 per share annually, offering a 2.8% yield. Financial institutions such as Morgan Stanley's Equity Research Division and BofA Securities have issued favorable ratings for ATO, with Morgan Stanley assigning an overweight rating and BofA Securities labeling the stock as a buy. 11th sector, real estate. Essex Property Trust operates as an equity real estate investment trust with a substantial market capitalization of $16 billion. The company focuses its investment activities primarily on the multifamily segment within commercial real estate, while its current geographic focus is predominantly in California and the Pacific Northwest. ESS remains open to expanding its presence into other regions, particularly if lucrative opportunities arise. The multifamily real estate sector is experiencing a significant upswing due to a pronounced shortage of residential housing across the United States, particularly in the realm of affordable and moderately priced accommodations. This trend has translated into robust cash flows and notable capital appreciation for developers and property owners like ESS, who possess portfolios of apartment buildings. While the financial results for 2023 are pending release, market analysts anticipate that ESS will report approximately $1.66 billion in revenue during its upcoming disclosure on February 7th. Shareholders currently benefit from an annualized dividend of $9.24 per share, equating to a respectable yield of 3.9%. Noteworthy for its consistent dividend growth, ESS has increased its dividend payout for 29 consecutive years, providing investors with a reliable source of income. Thanks for tuning in to today's episode of Simple Investing Secrets. We've covered some top-notch stock picks across 11 different sectors, giving you a comprehensive overview of potential investment opportunities in the market. Remember, understanding sectors is key to building a well-rounded investment portfolio. By diversifying across different sectors, you can spread out your risk and increase your chances of success in the market. If you found value in today's video, don't forget to show your support by hitting that like button and subscribing to our channel for more weekly updates. And as always, if you have any questions or want more information about any of the stocks mentioned, feel free to drop a comment below. We love hearing from our viewers. Until next time, happy investing.